either. So it's 381 to 295, the advance decline ratio. The Nifty is still down 5 points, just largely on the back of the 30 rupee fall in Reliance to 760. But otherwise things are okay. It's United Spirits which has taken a little bit of a knock. But let me ask Manoj Singla of Religare Capital Markets about all of these movers. Manoj, good morning. Good to see you in. How did you guys read the Reliance results, and what would you do with that stock at 760 now?
Yeah, I think, Udyan, good morning. Reliance numbers are obviously weak, and I think the stock price today is showing you that. Having said that, as a house, we are positive on Reliance. We believe the GRMs have bounced back. And we think going forward the operating performance will actually improve, plus the buyback should provide some support to the share price. So I think on a 9 to 12 month view we are actually positive Reliance.
Do you guys keep an eye on United Spirits? That's had a bad reaction to its results, 5% down today.
Yeah, I think United Spirits numbers were clearly much below estimates of consensus as well as ours, which is why you're seeing the correction down. I think fundamentally, again, on a 9 to 12 month view, United Spirits is a story that we like. I think there have been bigger issues related to obviously the whole debt and all that stuff. So I think once those issues get sorted out, United Spirits, I think, would look good from these current levels.
What have you made of this big market rally in January? Fundamentally, can you support much higher levels from here on?
Yeah, I think obviously, most investors obviously look at this rally as a dead cat bounce, saying the market was oversold, and so we have seen the rally that we have seen now. According to me, I think it's very difficult to say whether the rally will sustain, and what is important to wait for is what happens with the UP elections and what happens with the budget. I think if we do see some kind of reform, some kind of movement on the policy paralysis side, clearly this rally could be sustained and market could move up much higher. On the other hand, I think if we get disappointments on that front, we could see the market come back. So I think just in terms of the rally, given that we were oversold, I'm not surprised. But whether we can sustain it will depend on what happens on the fundamentals and the politics side.
How much importance would you give to the policy tomorrow and for the sustainability of this rally?
See, I think tomorrow then there's not too much expectation in terms of getting at least a repo rate cut. There's some market participants talking of a CRR cut. I think if we don't get any of these rate cuts, I still don't think the market will react too badly because there are not too many expectations of that. On the flip side, if we do get a repo rate cut or something like that, the market might actually rally from there. So I think just in terms of the event tomorrow, I do not see it impacting the market too much because expectations are already pretty low.
Flows have been very strong, Manoj. 6,000 crores in the cash market in 15 days and 6,000 crores in the futures market as well. Do you see that continuing from what you hear from the sales desk?
See, I think if we look back as to where the flows are coming from, I think first thing to highlight is this is not an India-specific phenomena. If we look at globally, almost all global markets have rallied in the month of January, and this can be attributed to obviously a lot of money printing that is happening in the Eurozone. So I think similar to what happened in 2009, if we continue to get too much of liquidity into the system, I would not be surprised for equity markets globally to keep on rallying. So I think there's money printing happening in the globe, and therefore equities are going up. And as of now, I think the trend looks intact.
L&T numbers come in today. Are you expecting a disappointment or is it in the price?
See, again, then on L&T numbers, expectations are pretty low. Almost everybody on the street expects them to come and cut their guidance further. I don't think numbers are expected to be that great. So expectations are on the lower side. Now, where they can come and miss even these weak expectations, one doesn't know. I think, again, structurally, on a 9 to 12 month view, the stock looked pretty cheap at $1,000. It's given a smart rally from there. But if it was to correct back to around 1,000 to 1,100, I would be a buyer at those levels.
Stay on. We'll come back and have many more questions for you, Manoj. But for now, the Nifty is very flat, 3 points down only. Reliance is still down at 764, but has recovered. But this much cut you would have expected after the results, which were quite poor. There are winners. Mindtree is up 4%, so that's a nice move. DCB is up 3%, that's done very well. Sterling Biotech up quite a bit. And you've got Karnataka Bank up 6% today, so that's started off the day quite well. United Spirits, not such luck because their results were quite poor. And Pantaloon is down a couple of percentage points today after the rally of last week. So net flat, but still there is a lot of buzz and action in the broader market with the advanced decline ratio at 530 to 290, so no problems there with the mid caps and small caps. We take a quick break and come back and keep talking about how markets have opened today and how the rest of the week might pan out. Flat markets today for the large caps, good for the mid caps. The breadth is quite positive, still 560 advances to 330 declines. Reliance is off the lows of the day at 766 and is consolidating there. Volumes are good on that stock, so probably it's soaking in some supply. Coal India is the other one which is looking a little troublesome, down 2% at 337. And Maruti ahead of its results looks a little wobbly, as does L&T. So these are the names which have kept the Nifty under pressure. On the flip side, ICICI Bank and Axis Bank continue the good work from last week, and BHEL is up 2.5%. But a quick word on the small caps now and how they've opened up. Rima.
Good morning, Udyan. It's opened up in the green for the small cap index. The sector which has moved in the small cap space are many of these rice names. So Kohinoor Foods, Lakshmi Overseas, KRBL, all of them have started off trade with a 5% up move. Onward Technology will be reporting its numbers today, and ahead of that, that stock has seen a gain of close to about 5% And Indo-Thai, generally we don't talk about it, but is up close to about 7% on the back of its numbers. On the losing side, Mid-Valley Entertainment loses ground for the second day in a row. Double-digit losses for 2 consecutive sessions today as well, down about 10%. And MP Distilleries has lost close to about 20%, locked in a lower circuit with volumes rapidly picking up. On that note, it's back to you.
Thanks, Rima. Still flat markets, which is fine given that last week was very constructive. We put on 4% last week, so ahead of the important event tomorrow, so many important results and the expiry on Wednesday, to trade sideways is not such a bad outcome after all. But let me get back to Manoj Singla, who's been speaking about markets. Manoj, what about Coal India? That's had a good comeback from 300 to 340 plus, but off late the news on pricing, etc., seems to be worrying investors again.
Yeah, I think on Coal India, structurally, Udyan, we have been actually negative. And while obviously when the stock went below 300, we thought it was oversold. But the fact remains that there's no clarity on what will happen to this whole pricing. And now they're talking of rolling back some of the price hikes that had been given at the beginning of this year. So I think we continue to wait and watch for what happens on the policy side. But fundamentally, we have been negative on Coal India and continue to remain so.
And Maruti, despite numbers today which may not look good, do you think the worst is built into the price?
See, I think probably at 900, yes, but I think the way the stock has rallied in the last couple of weeks, I think at current share price, we do think that there is some more time before Maruti can give you a sustainable rally. So I think we would actually wait on Maruti. It's more kind of a hold for us. But if you were to ask me whether I should go and buy Maruti at current price, the answer is no.
So post the rally where a lot of stocks have gone up 15-20%, where would you tell your clients to trim some of the positions now?
So I think as we were discussing, I think some of the stuff clearly like Coal India, a lot of the power and infrastructure names, which I think while they have given a smart rally from the bottom, fundamentals have not changed and are not expected to change anytime soon. So I think a lot of the power, infrastructure, reality names where you've seen a rally from the bottom, we're asking clients to trim positions.
What are you telling them to do on the private sector banks, which have come up quite a bit?
So I think again on a 1 year view, I think banks is one of the sector actually which we are pretty positive on. In fact, our view is at some point through this year you will get the rate cycle easing, if not tomorrow, maybe in March, and maybe more rate hikes, more rate cuts after March as well. So on a 1 year view, we're actually pretty positive on the bank sector, and we like both the private sector banks as well as the state-owned banks. So I think I would be in fact accumulating banks on each and every dip over the next 3 to 4 months.
What are your other big ideas for 2012?
So I think clearly, as I said, banks is one of the big ideas. I think on technology, we are selectively positive. Basically, Wipro is our top pick in the technology space, and I would think even Infosys, given the decline after the results, would be a good idea. The other interesting one that we have been calling for is some of the oil marketing companies, because we think a lot of negative news is already priced in, and as we go through the year, we don't think that the oil will bounce from here. In fact, we think the oil should come down. So we like HPCL, BPCL through the year, and we like Hero Motocorp. I think that's something that we think will surprise on the upside. We think people have gotten too bearish because of the rural demand thing, which we think is slowing down but is not collapsing, and so we think there will be positive surprises on the two-wheeler side as we go through the year.
What about the other two IT companies, HCL Tech and TCS? You're underweight on those names?
No, I think it's more of a relative call. So I think if you look at the top four names, I would pick Infosys. Wipro has been relative outperformers in this year compared to TCS and HCL. I'm not bearish TCS and HCL, especially HCL Tech, which is now very, very cheap in terms of valuations. So I think HCL should also give you a bounce in the second half of the year. But I'm just saying in terms of the relative picks, if I have to choose, I'll pick Infi and Wipro over TCS and HCL. Having said that, I think the only thing that one has to keep in mind is that the coming quarter is going to be weak for tech. That's pretty obvious from the guidance that we have seen from most of the companies. So I think you would get better prices on these names in the next 3 months. So one should be looking to accumulate these names in March to April timeframe for good outperformance in the second half of this year.
Do you keep an eye on Mindtree, which has done very well post its results?
I haven't looked at the numbers in detail. I just had a brief glance through it. I think the problem with Mindtree Udyan is that if you look at the history over the last 4 to 6 quarters or even 2 to 3 years, they have had very erratic performance. So the problem is one good quarter does not mean that it will be backed up with a good quarter in the next time around. So I think unless the company comes up with 2 or 3 consecutively good quarters and gives us confidence that the business has turned around, I would not be advising investors to go and buy the stock from investment perspective.
And are names like in the mid cap like Mahindra Satyam and Hexaware in your coverage list?
Yes, they are. I think Hexaware is one stock which we actually initiated recently, which we have a buy on. Because that is one company which, if you look at, has been executing consistently for the last 4 to 5 quarters, and more importantly, they have a good order book over the next 3 to 4 quarters as well. So I think numbers from Hexaware will continue to remain good. So that's one that we clearly like. Mahindra Satyam, again, I think is a company which has begun to deliver well over the last 2 or 3 quarters, and as standalone entity, Mahindra Satyam looks very good to us. The only thing that one has to consider on Satyam is that at some point the merger with Tech Mahindra has happened, and Tech Mahindra is something which is more of a difficult animal to actually get your hands around, because customer concentration is very high, and British Telecom, we don't know in what direction the contract is going. So if I was to buy Mahindra Satyam on a standalone basis, I like the company, but on a merged entity basis, first of all, we don't know the merger ratio, and secondly, I think Tech Mahindra fundamentally is a much weaker business than Mahindra Satyam. So I think that is the risk in terms of trying to call it, but as a standalone stock, I like Mahindra Satyam.
You were talking about oil marketing companies. What about upstream, names like Cairn, ONGC? Where do you stand on those names?
So then, as I said, if our call on the year is that we expect oil to come down, clearly we are not positive on Cairn, because if oil comes down, I think there will be negative for Cairn at the margin. I think ONGC is obviously a mixed bag, right? Because if oil comes down, they will benefit in terms of the subsidy side. I think at 250 to 60 bucks, the stock is quite cheap. So at the margin, I would be buying ONGC at 250 bucks.
What's your best or top pick in the auto space?
So as I said, Udyan, our top pick on the auto space is actually Hero Motocorp. We think the market has become too bearish in terms of the rural demand slowdown. And while we do think that rural demand is slowing down, we do not think that there is a complete collapse. So I think there will be positive surprises on volumes on two-wheelers over the next 2 to 3 quarters. Secondly, we think these companies will surprise positively on the margins. I think even on the conference call, Hero Motocorp came and said that they see substantial increase in margins in the coming quarter. So I think Hero Motocorp is something that one should be looking out for a 12-month view.
Do you track some of these infra-related plays like Crompton Greaves, Voltas, which underwent really deep corrections a few weeks back and now are showing the first signs of coming back to life?
Yes, Udyan, we do. And I think a lot of these cap goods, infra names look very cheap. The problem is they looked cheap even 6-9 months back, and the stocks corrected significantly even from those levels. So even at the cost of going wrong, what we are saying is that if there is going to be a rally in markets, it's probably going to be first led by the interest rate sensitives like banks and all that. So we are at least advising to first play the banks trade, and once we get enough signs that the economy is really turning around, we actually go and buy the cap goods and infra names. Now that might mean that we buy these names 20-30% higher from here, but if the economy does really turn around in the second half of the year, I think even from those levels one can make a lot of money in these names. So the first trade or the early cycle trade is probably going to be buying the financials, and I think the infra and cap goods to me is more the mid-cycle trade, so if you can call that.
Speaking of early cycle, are you convinced though that the cycle is turning, or are stock prices giving you that optimism fundamentals may not follow?
So as I said, at this stage, it's too early to say the cycle is turning or not. And I think the key events for that is going to be the result of the UP election and the budget. We have seen some noises by the government that they are putting projects on fast track, that they really want to improve, and so on and so forth. But unless these translate into some action, which will come out in the next 2 or 3 months, I think it's too early to say that the cycle is turning. So the way to play this is, I think one should selectively start increasing exposure to interest rate sensitives without going the full hog. Wait for news flow over the next 2 to 3 months in terms of what's happening, see the government's budget for next year, see where the government actually starts delivering on some of the things that they're talking about. And if that does happen, I think one should go and buy these names. Now typically as one happens in an economy, we have slowed down over a period of time. So the pickup, if it happens, will happen slowly. And I think it would be wrong to expect that we will see a sudden acceleration in the economy in the June quarter or even probably by September quarter. So I think if the economy recovers, it will happen gradually and probably recover only by, let's say, September or December quarter. But markets being markets will start to factor that in early. So I think if one gets good enough signs of movement on the policy front by March, from a stock price perspective, I would be going and accumulating these names aggressively.
Okay, Manoj, thank you very much. Good talking to you as always. That's Religare with its top ideas for 2012. Markets are flat, but off the lows of the day, 5,050, and Reliance is also beginning to stabilize, so that's not doing too badly either. Now down just about 20 odd rupees at 770. Here's Sudarshan with his top trading ideas for the day. We'll come back with more corporate talk.
United Spirits,